Welcome back to the second week of April 2024. We're going to get started with a quick weekly market outlook as per usual. All right, let's take a look at last week. I think one of the key focus for last week was definitely the employment numbers coming up from the US, and it was such a huge surprise. Market was pricing in for a 200,000 in NFP gain. What we got was 303,000. This is 100,000 on top of the consensus, and the previous number was actually revised down from 275 to 270,000. So we are still looking at a huge gain in the market consensus. And in addition to that, we do have a drop in the unemployment rate from 3.9% to 3.2%. The average hourly earnings also remains the same at 0.3%. So overall, it's good for the US economy, and that could be a potential telltale sign of what's coming on for this week's CPI number. So the CPI number for this week, which is last month's number for March, the CPI is expected to pick up from 3.2% to 3.4%, with the monthly gain kind of slowing down a little bit from 0.4% to 0.3%. The headline CPI is expected to go up, but the core CPI is kind of expected to go down a little bit. But again, a lot of the focus will definitely be on the headline inflation number. So if we do see that increase from 3.2% to 3.4%, do keep in mind that the FOMC last week has also talked about potentially not cutting as much rate as predicted. So some of the Fed members were talking about one rate cut in 2024, and then some were talking about two rate cuts in 2024. One of the possible scenarios that could actually play out is that instead of having that rate cut in June, which is what the market is expecting, the FOMC could actually remain on pause for June and then announce that for the rest of 2024 there's only two possible rate cuts. That would keep the US dollar stronger, because with the expectation from the central banks this week, we have the RBNZ, we have the Bank of Canada, we have the ECB. All of them are likely to keep rates unchanged for this month. However, the ECB has already committed to potentially having the first rate cut in June 2024. So if the FOMC does not have their rate cuts in 2024, that would mean the ECB, the Bank of Canada, the Bank of England would have their rate cuts first in the month of June. That's obviously going to be beneficial for the US dollar. So for the central bank announcements this week, obviously we have the RBNZ. RBNZ is likely going to remain a little bit more hawkish. They're likely going to mention that they will keep rates higher for longer. The Bank of Canada and the ECB is likely going to be a little bit more dovish, right? They're likely going to give a little bit more of a dovish comments, prepare the market for that potential rate cut that could happen in the month of June. And other than that, we have the PPI numbers coming out from the US, and remember last month's PPI number, it was actually a lot stronger. So it'll be very interesting to see whether or not the PPI is actually going to be stronger again this month. Last month's number was 0.6% on the monthly change. Consensus was for a little bit of a drop to 0.3% at this point in time. And then obviously we have the UOM consumer sentiment numbers, as well as the monthly GDP growth for the UK for this week. All right, jumping in onto the currencies, let's take a look at the Aussie USD first. This one here is basically in a range bound market condition. We do have that support. We do have a little bit of an order block building up at about 65 cents. In terms of key resistance, it remains at 66 to 66.50. So we're not looking at a lot of action coming off of the Aussie USD here. This is really strictly bound by a 1 cent range or 100 pip range on the Aussie USD, and this is likely going to continue. If we take a look at where the weekly pivot is currently located, weekly pivot is located at about 65.50, which is kind of the halfway point, and then resistance one is slightly a little bit higher than the upper range there, about 66.40. But again, we will be focusing a lot more at 66 cents as a resistance. And in terms of support wise, support one is located exactly at 65 cents, so that's likely going to still provide a little bit more support for the Aussie USD. For the Euro USD, this one here has broken back below the 1.0850, 1.09 range. For the past 2 weeks, we did see a little bit of a retest of that 1.0850 level last Thursday, and then post NFP numbers. If we take a look at the post NFP numbers, we do see the market come back down, but it did find a little bit of support at 1.08. Now, considering that 1.08 used to be the previous sell side liquidity level, which was already broken, so this is just a psychological support level right now at 1.08. The current momentum on this one here, if you take a look at the RSI is completely flat for the past 3 days at 50. So this does indicate that there is actually a lack of momentum coming in for the Euro USD. But technically speaking, we do have that resistance trend line capping the Euro USD, and the positioning for this one here is that this is still below the Ishimoku cloud. So there are actually higher probability for the Euro USD to continue to move to the lower end. We are likely going to be testing 1.08 one more time, and once we do break below 1.08, obviously that opens up further drop to the downside towards 1.0750 and 1.07. However, if it does manage to close above 1.0850, then we anticipate that 1.09 will act as a stronger resistance for the Euro USD. In terms of the pound USD, this one here, there's a lot of key levels to watch out for, and forgive me for having a lot of lines here, but there are some key levels that we cannot erase from the chart at this point in time. 1.2550 is obviously one that's going to be the lower end of the support area there. 1.26 is also a very important support area. That's also where price kind of bounces off post the NFP numbers there. But consider this, this is technically still below the Ichimoku cloud, and it is still below 1.27. On the upper end of resistance, obviously we have 1.27, 1.2750, 1.28, and 1.2850. So these are the four levels in terms of the upper range for the pound USD. We are technically on the lower end of the range, and we do have a little bit of a support pivot there at about 1.2625. If we do break below 1.2625, we need to clear off 1.26. Okay, so for this week, we definitely need to see a daily close below 1.26. If we do have that daily close below 1.26, then we're likely going to track lower towards 1.25 and 1.2550. However, if price pushes up higher and retests 1.27 and manage to close above 1.27, this would transition the pound USD back above the Ichimoku cloud. We're likely going to see a retest of 1.2750 and potentially even higher at 1.28. But right now, the consideration for a potentially hotter inflation number, that would mean the US dollar is actually primed for a stronger move this week. So the consideration for that is that the Euro USD, the pound USD, could potentially be on the weaker side this week. All right, next up is the dollar Japanese yen. Dollar Japanese yen, it is kind of a little bit frustrating. If we take a look at what's going on here, the previous resistance, the previous high in the month of February, that has acted as a support area for the dollar Japanese yen. So the range for this one here, and in fact this has actually been trapped within this range for the past 3 weeks. It is actually between 151 to 152. So the market is still reluctant to take this above 52 for fear of intervention by the Japanese government. At the same time, they're actually still not letting off the go of their positions. We are still looking at buy on the dip situation pretty much at about 151. Support wise for the dollar Japanese is actually really far below. Take a look at the fair value gap there, which is has been around basically since March. We haven't touched the consequent enrichment for the fair value gap. That's located exactly at 150. Obviously, that's a key psychological price level for the dollar Japanese yen. So what could potentially happen? In fact, this is what we have been waiting for on the dollar Japanese yen. We have been moving in a very tight range-bound market condition. Technically, it is a rectangle pattern that we're looking at here. So once we break 152, we could actually see a quick break to the upside. That would push price towards 153, 54 up to 55. Obviously, intervention levels are going to be coming in at 153 and 155. So obviously, there's going to be a lot of caution once price breaks above 152. However, if we do break below 151, then we are actually due in for a little bit of a correction. Doesn't mean that it's actually going to reverse the market, but we will see that retracement lower towards 150 and potentially 149 on the dollar Japanese yen, where a lot more long-term traders, carry traders are probably going to buy back on the dip there on the dollar Japanese yen. But regardless of the matter, we've been confined in that 151, 152 range for 3 weeks. We're anticipating a breakout this week, potentially with the release of the inflation numbers coming out from the US. All right, lastly, we have the dollar Canadian. The dollar Canadian, if we take a look at the movement for the dollar Canadian, pretty much ever since the start of 2024, at the beginning of February, it actually started to range bound. Now, the range, obviously, this is on the daily charts, is actually between 1.3450 and 1.36. And 1.36, ever since March, has been capping the market from progressing any higher. And that's still the same situation as we see right now here. We are grinding to the upside. If we take a look at the slope that's going on, there's actually a support trend line that's starting to go up with the dollar Canadian. So this is actually starting to grind an attempt to break 1.36. Obviously, it is a strong psychological level that holds the market for the past 2 months, and it is going to take a lot to break 1.36. Now, obviously, this week the market could actually be primed for that breakout. Obviously, if we have these CPI numbers coming in stronger than what the market is expecting, especially if it comes in at 3.5%, which is actually going to be a surprise to the market, and then comments coming out from the Bank of Canada to be really more on the dovish side, if they do mention or give a confirmation that a rate cut is going to happen in June, this could potentially break that 1.36 level. So this is definitely one currency to watch out for this week because the fundamentals are actually primed for a potential breakout this week. All right, so with that, good luck with your trades, and I'll see you soon.